Hello, and happy Thursday to all of us, community. I hope you and yours are doing fantastic. Welcome to another Thursday community event today on YouTube Live. For those that are able to make it, we are very happy to have you all here with us today. As usual, we always like to use these various platforms, not just to bring awareness to our industry, but also, of course, to our beloved ecosystem as well. This industry is still so young. There's so much to learn. There's so many changes going on right now. And as the title gave it away already, there's so much global uncertainties, and these uncertainties are directly tied to the industry. As we know, in the financial industry in general, it's very emotional. It's very sentiment driven. And everything that is happening that is geopolitical or involves a macroeconomy or affects macroeconomy affects the industry as well. So we want to understand that even though these global uncertainties causing, and we will get into details as we progress in today's session, but the highlight of the day today is to understand how to embrace these global uncertainties, how to navigate through them, and not to look at them as risks and challenges, but turn these risks and challenges into opportunities, and also understand that without these uncertainties, without these global events, there are no incentives for the central banks and the Feds, the governments, to stimulate the economy. So these are all part of the larger scheme, and the governments have to have an excuse. They have to have an occasion to print, or rather stimulate the economy with high amounts of fiat currencies. So if everything is peaceful, everything is smooth, going well, what's the point of printing money? There is no point of printing money, right? If everything is good, there is no use for printing money. There is no use for stimulating the economy. This is the mindset we should look at these risks or these global uncertainties for. But we'll get into more details as we progress. First of all, once more, welcome to today's community event. We are all very delighted to have you all here with us today. Another happy Thursday. I hope your week is going great so far. And as always, I want to thank all of you for the beautiful comments that you already placed. There's a lot of comments already here. The community is really on point. We aim to come back at the end, as usual, to go through the comments, the questions, the feedbacks, and we'll do that at our own slow pace. We'll take our time at the end to go through every single comment of our community. We've been growing, and now it takes us at least a half an hour to go through all the comments. So I rather want us to jump into today's topic, so that those that will be listening to this session later on, they won't have to skip. They'll be able to just get right into today's topic with all of us that were able to make it today. So that's exactly what we're going to do. So, and in the meantime, all tweets are out, community. Bullrun is out, Survivor, Killer Whale is out. All of them are out. So let's ensure that we engage with those tweets, as we know that the more we engage with them, the farther they reach, and the more individuals they can attract to our community, to our industry, right? So with that said, community, welcome also for those that are brand new in the community. Feel right at home. We are very delighted. We are happy to have you all here with us today. And for those that are always consistently being part of these sessions, we are very happy having you here as well. So with that said, community, let's jump into today's topic. Let's get right into today's topic. As there's so much to be talked about today. So let's jump right into it. Let me share my screen so we can get right into today's session. If you can bear with me, and I'll be sharing my screen here. All right. All right, community. So as always, I always like to look at just briefly go over the market just to have an idea where we at right now. We are barely above 2 trillion in market cap. We are down close to 4%, right below 4% for the day. And Bitcoin has been now dropping and hovering between 60,000. Ethereum dropped down to 2,300. And all these goes hand in hand, like we discussed. It's a very sentiment driven, very emotional industry. And we can see here that whenever you see red, it has a lot to do with the sentiment, right? So this is how you see we are in complete fear right now. We are dropped to 96, the fear and greed index. It shows how emotional we are right now. We are fearful right now. And this is what the global uncertainties bring. This is why we brought this topic today, because it's very important for us as a community to really understand how we should approach things, how we should look at things. And this is why we brought this session today. It's really just meets the occasion, right? It really meets the occasion as we have it. So with that said, community, let's jump right into today's topic. Like we said, we have so many uncertainties, so many things are globally going around on a global scale, and they cause a lot of fear. And this is how the market is reacting as well. So with that said, let's jump to the first headline. The first headline involves how the current President Biden is in talks with Israel, and they're planning on how to strike oil facilities of Iran. So if individuals hear things like that, obviously it affects the market, right? It spooks the market. People are fearful, people are uncertain, people are doubtful. What do people do if they're fearful and doubtful? They sell. They start selling, right? They start selling instantly. And these are part of the news that we read, that we see things flying around, and people, like just being fearful and uncertain of the market conditions. Most of the time, if people are uncertain, they just start to sell their assets, and they just panic, right? It's a human reaction. And this is how sentimental our markets are. And this is why we always aim, or we always strive to educate the community, because if you're emotional driven, you always make irrational decisions. But if you're informed and educated, you can really make rational decisions that makes, because you understand what geopolitics are affected, why is that so, and also you understand that you should not look at these uncertainties, global uncertainties, as a risk and as a, like fearfully, but you should look at them with the eyes of, this is an opportunity. And as we progress throughout this session today, we will really understand why we should look at this as an opportunity. So what's next? Another thing also that we read here, the historic strike that is going on in the US coasts, right? US ports, there's a huge global impact on supply chain. And this is huge because over 40% of the imports go through these East Coast ports in the US. And they affect heavily major industries, automotive industries, the retail industry, which is the largest, like the food, beverage industry. And it affects also a lot of parts that are needed to build real estate, right? So products. So these are three core, the largest industries: retail industries, manufacturing, like house industry, and then of course other products as well that we use for our daily basis. So it's a huge deal, like a massive dockwork strike, like we said, at the seaports in the US are expected to wreak havoc on a global supply chain, right, and the global economy. And already, like we saw when the Baltimore bridge collapsed due to some whatever happened, nobody really knows exactly what happened, but a ship ran into the Baltimore bridge and it collapsed. That was already that already caused a backtrack or backlog as far as supply chains. But now with this happening and the drought that affected the Panama Canal as well, so these are things that are accumulating and are causing a lot of uncertainties, right? So these are the news that we hear, and these are the things that are causing a lot of uncertainties right now. A lot of uncertainties mean people are fearful, and usually when people are fearful, they do irrational things because they're dealing with emotions, right? So another thing also that we see in the news is how the Bitcoin ETFs inflows. We always see these huge numbers, right? We see how 45 billion US dollars so far have been flowing into these Bitcoin ETFs, which largely are dominated by these 11 US based asset managers, right? Led by BlackRock, Fidelity, ARK Invest, Invesco, and the rest of them, right? And at the same time, these are also the fastest growing ETFs in the history. As we speak, Bitcoin ETF alone, especially the one for IBIT, which is BlackRock's, it's currently the fourth largest ETF in history. And this after only 8 months, less than 8 months right now. And it's already the fourth largest. The other ones have a head start of decades, so it will easily catch up and become the largest eventually. But what's the point of having such a high inflow when, if it really comes down to it, why are people selling Bitcoin and buying gold during these geopolitical tensions? Weren't we told that Bitcoin is supposedly the digital version of gold? So why are people selling Bitcoin so much? Why are people selling Bitcoin? Why are they not buying the digital gold? Why are they selling Bitcoin and running to gold to buy gold? Amid these geopolitical tensions that we talked about, there's so much uncertainties, global uncertainties, the war rumors, the strikes, the election that is still we are still anticipating. All of these things are causing a lot of fear in the economy and in the industry in general. But the question remains, why are people selling? Why are they selling Bitcoin and buying gold? Well, there's an answer to that, right? It's because we've been always told, remember our last community event when we talked about, we always have to verify things. Let's not just run with anything that we hear on social media. Let's always verify things. So far, we've been always told how Bitcoin is digital gold and how during times such as these, Bitcoin is a safe haven. We should run to Bitcoin and all of that. But now everybody seems to be doing the opposite. The yellow line is gold. It keeps going up and gold price is at all-time high. The green line is Bitcoin. So people are selling Bitcoin and buying gold. Now let's find out why, because we can't just leave that out there. Well, Standard Chartered is one of the largest banks in the world. They just put out a report and they're saying that Bitcoin is not a safe haven from geopolitical risks, right? But still, you just go ahead and buy the dip. How ironic is this? Buy a dip of something that is not a safe haven. Who wants to do that? People are running specifically to gold because they know that gold is, in times of geopolitical tensions, gold is a safe haven. And this is what smart money is doing. They're now all of a sudden, Bitcoin is not a safe haven, right? So risks stemming from the Middle East conflict are likely to push Bitcoin below 60,000. And this is exactly what we've been witnessing. We've been seeing what's been happening, right? And we've been wondering, why is the market, dropping so much? Why are there so much sell-offs? And because Bitcoin obviously dominates the industry with 56% of the market share, whatever Bitcoin does, the rest of the cryptocurrencies also follow. So Bitcoin is likely to weaken below 60K, but investors should buy the dip, right? That's what the report is suggesting. So, but Standard Chartered say that the digital asset is not a safe haven against geopolitical risks. The bank wrote that Bitcoin is a hedge against traditional financial issues, but not against geopolitical issues. So that's a big difference. It's not against geopolitical issues, only against, it's a hedge against traditional financial issues. So, but so far we've been always told that it's a safe haven, right? So I will leave it at that. Let's always verify things and not just take things for what they are, right? These are the things that are causing so much uncertainties because many individuals, especially newcomers in the crypto space, they're confused right now. Like, what's happening? I thought you told me to buy Bitcoin when times are rough. Now you're telling me I should go for gold? So there's a lot of confusion, community. And there's more confusion, right? Like right now, the news right now is on banks, right? More specifically, the Bank of America. We had that the Bank of America, their clients right now, and roughly 20,000 of them were logged out of their accounts. They had no access to log into their own personal accounts to access their own money that they work for. So on a daily basis, they were logged out of it, and even they couldn't even see their status, like how much money that they had. It showed zero, and this, of course, caused a lot of fear to these investors because Bank of America is not your local regional bank. This is a global bank, one of the largest banks, too big to fail bank in the US. And on a global scale, it's one of the largest banks, top banks in the world. So this, of course, also caused a lot of uncertainties, doubt, fear, and it's just adding more to all this panic that is already going on through all these war rumors. We see missiles flying everywhere. We see people are striking. Major ports and major supply chains are cut off, right, due to this. We hear one news is telling us how much inflow, 45 billion in inflows are coming in. However, another news is showing us how Bitcoin is actually dumping. People are selling Bitcoin and buying gold. So what's this news for? You know, this is contradictory. And then we also now see that, okay, it's not a safe haven if it comes to geopolitical news. It's just a hedge against traditional financial products, right? Now we hear that banks are also inaccessible, and this is not your regional bank. This is one of the largest banks in the world. But thank goodness it's been resolved, right? So it's been resolved. The news is that there was a glitch that happened, and like say a glitch with Bank of America's mobile and online services, which happened on Wednesday, prevented thousands of customers from accessing their accounts, like we said. And they also discovered that their balance was at zero accordingly. And this, of course, caused a lot of fear and resentment from the clients, from the customers as well. And it was nationwide, right? It wasn't just one state. It was a nationwide issue, and it began in the morning of Tuesday, and it affected over 20,000 customers. And then it was resolved Wednesday evening, right, local time. So some customers were livid, of course, and they went to X, to Twitter, and just they were frustrated. They were talking about how Bank of America should have at least given updates and informed the clients what's going on, right? Or obviously, it was a widespread issue of Bank of America. Possibly it was a system-wide issue and all of this. Why are we pointing these things out? Is to just highlight that imagine you are working hard for your funds, for your asset, and you're being locked out from having access to your own funds. You can't even view your balance. Do we see where this is heading? And this is basically what they were saying, that banks go down, but Ethereum doesn't, right? The blockchain technology, it doesn't. And this is what brings awareness to individuals, knowing that if you're on a decentralized finance, you your own bank. You don't have to ask Bank of America to access your account. Your MetaMask wallet, your Trust wallet, your decentralized Coinbase wallet is your own bank. You have access to your asset any given time. And this is what people will eventually understand. Because when you try to educate individuals, they don't get it until there is a disaster. It always takes a crisis, it always takes a disaster for people to understand what you're actually trying to tell them, right? And this is just in the human nature. We can't relate to something unless a disaster happens, unless a crisis comes. And then we'll really appreciate what we have. So we already have the technology. We already have a decentralized financial system that is flawless, that we don't need intermediaries. You have access to you're your own bank. You have access to your own assets whenever you feel like it. And you don't have to fear that you'll be just logged out. You can't access your online banking. Your platform says that your balance is zero. You are fearful. These are very fearful things, and these all contribute to the already fearful and uncertainties that we are facing right now. So imagine hearing about wars, rumors of wars, and hearing about how the strikes are happening. This already is fearful enough. And now you try to access your bank account and you can't log in either. So these are just things that are causing a lot of fear, and it affects us, and as we see here in the market, and we can see it reflecting on the market as well. So these are the global uncertainties that we are facing that are happening right now, right? And why are we pointing these out? Because this is all part of the story. This is all part of the journey. If these things don't happen, the central banks, the Feds, they don't have any reason to print money. They have to justify why they're printing money, why they're stimulating the economy with trillions and trillions of dollars because of this. But who is really going to benefit? We have to connect the dots, community. While all of this is happening and the retailers are panicking and most of them are selling off their assets due to panic, right? Smart money, look at what they're doing. Meanwhile, the Commodity Futures Trading Commission, the CFTC, they already not just recommended, but they already gave access that firms can now use tokenized shares as collateral. So while retailers are panicked and being fed with fear, and they're feeding into it and accepting, embracing it, real firms are being given access to use their tokenized shares as collateral. How is this possible, right? And who's on top of the list again? As usual, BlackRock. So BlackRock and Franklin Templeton, they can now see tokenized shares of their money market funds traded as collateral by the end of the year. So while unassuming retailers are panicking due to these news, traditional financial markets industry, they are busy setting themselves up for the liquidity rush that is about to enter the industry. They're already being given green light, and we've been discussing about this for so long, how their BlackRock and other asset managers are going to use their treasury, their money market funds as collateral. And specifically BlackRock and JP Morgan, they in partnership are already doing this. JP Morgan already has an entire infrastructure on the Ethereum blockchain to use BlackRock's money market funds as which are tokenized assets. They want to use them as collateral. Why is the collateralization of these tokenized assets so important? We should ask ourselves. It's because this economy runs on debt, right? This economy is running on debt. And to issue debt, you have to have collateral so that you can borrow money from the central banks or from the Feds and you can use those collateral to buy the bonds, right? Treasury bills, which is US debts. And then you get low and cheap money as a bank, and then you can lend that cheap money out. So all they're doing, community, is what we've been discussing about for the longest. They are using their tens of trillions of dollars. They tokenize these assets, these money market funds, and then they give it to JP Morgan, which is the largest bank in the world, and they are lending it out to you and myself so that we can be indebted. We can purchase homes, loan vehicles, go for further education, and be great employees, right? And this is exactly the system that they're following. So all this tokenization push of tokenizing assets is not because they believe in the technology or because they want us to be our own banks and believe in DeFi. No, they're doing it because they can now use the already existing money and make more money out of thin air, right? Now they can have money printed and lend free money and lend it over to the retailers. That's exactly the plan. That's exactly what's going on. And this is going to happen by the end of the year. So while retailers are panicking and panic selling, getting rid of their assets, and what did we say? If interest rates are being cut, what happens? Your assets go up. But if you're not informed, if you're not educated, you're emotional, right? Like majority of the people. That's why we are 36%. So you're very emotional right now. You're not thinking straight. So you're selling your assets and holding on to fiat while smart money is busy using the assets that they already have, and they understand that it's about to go up in price and they want to use it as collateral. So if you're uninformed, uneducated, instead of holding on to your asset, you are feeding into all this instead of understanding that this is good news. Bad news is good news, right? If you hear such rumors, this is good news for us. This means that more money is going to be used to stimulate the markets. This is exactly what you want to hear. If you see such news, this is great. This is good news. Because why am I saying this? It's because while people are selling their assets, they don't understand that if you cut interest rates and during times of market stimulation, assets go up. This is why they're using their money market funds for collateral. Why would they do that if the asset prices won't be going up, right? So we need to understand the basics is that during interest rate cut period, during the bull cycles, there's a lot of liquidity. And during interest rate cycles, that means also that the assets, whether it's real estate, whether it's stocks, gold, whatever it is, it will go up. This is why BlackRock and Franklin Templeton, they're setting themselves up to use their funds that are about to go up, their assets, as collateral. So if you understand this, you won't be panic selling, like the entire market is selling. And these are majority is retailers, you and myself, right? While you and me are selling, smart money is gearing up, buying more assets like we saw here, right? So you ask yourself, where does all this money go? Institutions, they are buying 45 billion worth, right? Why are they buying so much? Because they're using it as tokenized shares. They want to use it as collateral, right? So while they are busy buying and we are asking ourselves, where does this money go? Because it doesn't affect the price because they're doing everything over the counter, off chain. They're into the liquidity business, community. All you need to be in the liquidity business. So while they're piling up, selling Bitcoin and buying gold, using that as asset, as far as ETFs, they're buying a bunch of it. Why are they doing that? Because now they've gotten the green light by the Commodities and Futures Trading Commission to use those funds, as collateral. They can use those money market funds as collateral, right? And this is great because once we all know that with interest rate cuts means assets go up, asset value is going up. right? Now, let's look at something else. Another thing I want us to look at, let's scroll down here. So you remember how we've been talking about this. So BlackRock's institutional digital liquidity fund, let's just call it the liquidity fund, BlackRock's liquidity fund. This is an example of how creating blockchain-based tokens of traditional investments such as bonds, we always talk about bonds, these are treasury bills, this is US debts, and funds is a fast-growing use case for the larger digital asset space, right? So the BIDL fund, which is BlackRock's liquidity fund, became the largest tokenized treasury fund just 6 weeks after it launched in March. And now it surpassed 500 million in market value. So it's after 6 weeks, it's already became the largest. What is BlackRock? What are they into? They're into the liquidity business. That's all they do. They're into liquidity. They pool liquidity together, and then that's the business they're in. They offer it for trading. That's all they do. They don't hold any assets. It's JP Morgan that holds all the Bitcoin. They just given shares issued by JP Morgan, and they're selling these shares using a liquidity pool. Because how are they generating revenue? Through volume. That's all. They're earning transaction fees. So the more liquid they are, the more transaction fees they get. So the more liquidity they accumulate, the more volume they get. The more volume they get, the more revenue they receive, because the way they generate revenue is through building a large pool of liquidity, right? So why am I pointing this out is to highlight that this BlackRock, this liquidity fund, as you see here, it's been just growing gradually. And the only purpose it was developed was to provide liquidity to these tokenized assets. It's not the first time talking about this. We've been talking about this for so long. And the only purpose is to provide liquidity. So they're into the liquidity business, right? And one other thing I want to highlight here, guess what network is on? Of course, it's on the Ethereum network, right? So the largest liquidity fund that is led by BlackRock, which they already just received a green light from the most important commission to use their shares, their tokenized shares, as collateral. This is a big deal, community. And knowing that this liquid fund is on the Ethereum blockchain. Who else is on the Ethereum blockchain? Us, right? So this just shows you how much liquidity is about to enter the space. And this again highlights that if you want to succeed in this industry, you have to be into the liquidity business, right? Just like people confuse, for example, McDonald's, they're not into flipping burgers, they're into real estate, right? Tesla, they're not into manufacturing vehicles, they're into data. Same with Google, right? And people really don't understand the whole concept. And same thing, asset managers, they're into the liquidity business. That's all they do. Liquidity and data. That's all they do. So if you want to succeed in this industry, in DeFi, in the crypto industry, you have to be in the liquidity business. You have to create a pool, a large pool of liquidity. You have to. And this is exactly what BlackRock did, right? But as always, community, don't take my word for it. Let's verify this. Let's verify. And this time we're going to verify with a bunch of different companies, international companies from different countries. And one of the most trusted countries in the world, if it comes to finance, is Switzerland, right? So let's look at a few Swiss companies that are really also into the business of liquidity. Let's look at what are the challenges that they want to solve. A lot of institutions, traditional institutions, are coming together, they're partnering together, and they want to solve some challenges. Community, let's find out what are the challenges that they want to solve. Let's go one by one, right? We understood that BlackRock is into the liquidity business. Okay, we understand that. But let's look at other institutions. What are they into? Let's find out together. This is very important. So let's start with this Swiss fusions. These both companies are from Switzerland, and they're coming together to create a product. And soon we'll find out the reason why. So the first one is called Tarus, and the other one is called Actionariat. These two come together. Let's find out which roles that they're playing, each of them, right? So first of all, before we go there, guess what they selected as their blockchain? Of course, everything will be Ethereum based, right? It will be Ethereum based tokenized shares. Why is everything on Ethereum? Because Ethereum is the largest smart contract, right? Blockchain. And it has not failed. It has not stopped running since its inception. So Ethereum, if it comes to real world assets, tokenization of assets and shares, everything happens on Ethereum. This is where all the magic happens, on Ethereum. So Tarus, which is a Swiss company and also a trading platform, they are selected Ethereum and tokenized shares that we just been talking about. So it's not just BlackRock and JP Morgan and Franklin Templeton, but it's also other countries that are doing the same thing. So anyway, so Taurus, there are an exchange, like we said here. They are an exchange, and Actionaire, they provide the infrastructure. Let's look at it even further here. So Taurus is a provider of digital asset infrastructure. So they provide the digital infrastructure. And they selected, of course, Ethereum-based tokenized shares issued by Actionarat, right? So in return, Actionarat, they will provide their clients with a pathway and list them on the Taurus digital exchange. So this collaboration will be launching in November, so next month. Do you realize something here? While retailers are panic selling due to all these events, smart money is realizing that these events mean the economy is about to boom. We need to put ourselves together. Smart money is busy putting out products. We read that the other collaboration is by December, by the end of the year, they're coming out with it. This Swiss company is coming next month, they're launching this product. But let's understand, what are they doing here? So what is this collaboration all about? This is the most important things. Let's understand why, what makes this collaboration so special, right? It's like the Actionarat, like we said, they're experts in tokenizing Swiss companies. Same thing with BlackRock. So this is the Swiss version of it. So all Swiss companies, traditional companies, they want to tokenize them. And once they tokenize them, they're using Taurus institutional grade trading platform and technology to trade them. And now, community, let's ask ourselves, why are they doing all of this? Remember, we just answered this question. Why is BlackRock doing this? Because they're into liquidity business, right? In the business of liquidity. And we said, let's not trust my word for it. Let's verify. You always have to verify things. So let's verify. Why are these two Swiss companies joining forces? Why are they doing this? They're telling us why they're doing it. It aims to what? Increase liquidity. So this is not my word. This is them saying it. They're literally spelling it out. They're telling you, we're doing this because we need to increase liquidity. Because why? You have to be in the liquidity business to succeed. How will you have trades if you're not liquid? How will you accumulate transactions if you're not liquid? You have to be in the liquidity business. It's as simple as that, right? And this is why they're doing it. As simple as that. There's really nothing more to say. And to really understand what they're saying is that a security token is a form of cryptocurrency representing fractions of assets with value in the real world. These are the so-called real-world assets. They include equity in companies, real estate, and bonds. These are the largest ones. Shares, real estate, and treasury bills, bonds, US debts, or other nations' debts. These are the ones that they're going to tokenize, and then they're going to use them to increase liquidity, provide liquidity. They're going to sell them as shares to the companies, and then this is how they're going to generate revenue through transactions. And of course, they chose Ethereum. Where else? They're going to do all of this on the Ethereum blockchain. So all these tokenization projects through the largest asset managers in the US, all 11 of them are going to be on Ethereum. And if you come to Switzerland, which is by far and arguably the most respected and trusted hub if it comes to finance and banking, they're doing the same thing. They're going to tokenize all Swiss securities. And then once they tokenize them, they're going to trade them on a digital Taurus exchange. Once they do that, they're going to collateralize them. And then why are they doing this? Is because they want to increase liquidity. That's the aim. Simple. Nothing new, right? We all know about this, but that's not enough. Let's go even further. Let's look at another company. This one is called Vela. And it also happens to be a Swiss company, right? Now, what's so special with Vela is they literally debuted a physically backed Ethereum staking. ETP stands for Exchange Traded Product. It's the same like ETF, but in Europe they call it product, they call it a product. And this is listed now on the London Stock Exchange, so in the UK. So remember, in the US, they also have Ethereum ETFs, which is not doing so well right now. And you can't earn staking rewards, right? But now Vela, a Swiss company, they are listed physically backed Ethereum staking exchange traded product on the London Stock Exchange. Now let's look at this even further. This is very interesting, right? So Vela, like we said, a Swiss digital asset investment firm run by so-and-so, has introduced a physically backed Ethereum staking exchange traded product on the London Stock Exchange. Why did they do this? Because it provides institutional investors with a passive, non-leverage exposure to Ethereum while allowing them to earn staking rewards. How about that? So remember, the question we asked before we got into this is, what are these institutions? What are they solving? So far, what do we have? These ones, what are they solving? It aims to increase liquidity. This is as simple as that. They want to increase liquidity. They're solving the liquidity challenge, right? What are these companies? What are they solving? What are they solving? They aim that they want to allow the investors to earn staking rewards. So they're literally working on solving a sustainable staking distributions, because now they are producing a product that is traded on the London Stock Exchange that you can stake and you can earn staking rewards, and it's fully backed and it's on chain, right? So you can verify it. This is the problem that so far these two are solving these two separate problems. Efficient, sustainable staking distributions, because they want to allow the investors to earn staking rewards. How are they doing that? It's fully backed, physically backed, meaning that it's liquid. They have the liquidity. They're also into the liquidity business, right? And it's non-leveraged, meaning you can't take loans, you can't take borrowed money, debt against it. It's only cash. You have to be liquid. That's the product they have. It's a very, very special product. That's why it's a exchange traded product, not exchange traded fund. That's a difference. It's physically backed by Ethereum, and it gives its holders staking rewards. So the first one is focusing on increasing liquidity. The second company is focusing on sustainable staking distributions, right? Let's look at the third one. What are they focusing on? They're all here to solve challenges, right? So there's another one here called Credible. They partnered with, Credible partnered with Plum. So they together are launching a new real-world asset, surprise, surprise, liquid solution. Why is everybody focusing so much on liquidity? I wonder why. Because this is exactly what we always talk about, tell the community. Liquidity is key. You can't do nothing without liquidity. Nothing. Literally nothing. BlackRock, what are they into? A liquidity fund. Why? So that they can provide liquidity for all these tokenized assets. Why are these two Taurus and Actionarat, why did they collab? Why did they collaborate besides creating infrastructures and tokenizing shares? Because they want to increase liquidity. Simple as that. Vela, why do they come together? They want to give people a physically backed Ethereum, meaning it's a sustainable staking distributions. They want the investors to be able to earn staking rewards in a sustainable manner. Okay, Credible, what are they into? They also want to bring real-world assets and liquid solutions. Let's look at them. What are they doing? So there's three solutions that they're bringing, right? First thing is that they want an on-chain, meaning that it will be transparent, verifiable. But what do they want? Surprise, surprise, liquid assets. And what do they want to do with these liquid assets? They want to use them as collateralized on-chain lending, right? Who else is doing this? Well, we know BlackRock is already doing it, right? We just read here that the CFTC already gave the green light. Firms can now use tokenized shares as collateral. So they're doing exactly the same thing. They want liquid assets that can be used as collateral on-chain, meaning you can verify them for lending. And what else? High yield. So they also want trading rewards in a sustainable manner using debt as collateral, and the asset needs to be liquid as well. That's not enough. What else do they want? And where the yield come from? Their yield is limited to 30 days only. So it's not sustainable. They only give you a 30-day, 10% annual percentage yield. That's it. After 30 days, nothing anymore. So they're not focusing on sustainability either. And then in 2025, they're launching another one. This time, they give you a 90-day, 15% APY, right? Why are they doing this? Because they haven't figured out a sustainable way of issuing yield. So they have to limit it to 30 days or to 90 days. That's it. After that, it's over. The product is finished, right? And this is exactly now that let's go full circle. What are we always talking about, community? What are the 4 challenges in the industry? Let's look at it. Lack of liquidity. This is why these two institutions came together, Taurus and Actionarat, to address the lack of liquidity. The aim is to increase liquidity, right? We always talk about the 4 challenges in the industry, lack of liquidity. So these institutions are here to solve that. What's the other institution doing? Sustainable staking distributions that is physically backed by Ethereum. So it's liquid again. And they don't want non-leverage, meaning without any debts. You can't take any debts against it. It has to be cash only. And they want to allow their clients to earn staking rewards. And what are we always talking about? Unsustainable staking distributions. So here you have an institution that is solving the unsustainable staking distribution part of it. And then finally, we are here now. They also want a liquid asset, high yield. They want also distributions. Theirs is limited though, right? Only 10 to 90 days. And this is why they're talking about how they want to. Here it is. So what they want to do is also enhance liquidity. At the end of the day, this is what they want. They want to enhance liquidity. And they're talking about how they want to do this in an efficient way, bring efficiency into DeFi. So do we realize what we just read here? They want to enhance efficiency. They want to they want high quality private credit products in the DeFi space. What does it take to have a high quality private credit product? You have to have liquid assets. And this is what they're telling you up here. They're telling you that we need a liquid asset that we can use as collateral on chain for lending. And we also want high yield. And it should be, this high yield product should be what? It should be right here. It should be efficient. So they're talking about efficiency. They're talking about high yield. They're talking about liquid asset. They're talking about sustainable staking distributions. And they're talking about increased liquidity. This should be very familiar, community, because those are exactly the 4 challenges that we're solving. And none of them, if you paid attention, especially this one, they don't have sustainable staking distributions. They are limiting it for 30 days. So if you didn't participate from the beginning, you're missing out. There's only a 30-day and a 90-day one. How about an unlimited one, using your volume efficiently? They don't have that. They don't solve that challenge. So they're not there yet. They're solving one thing, but then still bothered with another thing, right? So even though now they're creating, the aim is to create liquidity, but now they have an unsustainable staking distributions, which is limited to 30 and 90 days. That's it. However, their focus is on, and these companies, their focus is on giving out sustainable staking distributions. So they're doing what this company can't do. They're not sustainable. So Vela is sustainable. However, they're focusing on staking, but they're not focusing on inflation, like on solving the scarcity part of it. And same with this company. They aim to retain liquidity. However, how are they giving back? How are they giving back to the community? They're not giving anything to the community. So they are just focusing on liquidity because it's in their best interest. They're a trading platform. So they are just happy to trade all these liquid assets and generate revenue. But what about their community? They're not getting anything in return. So why am I pointing all of these things out, community? Let's come back. We shouldn't worry or panic sell assets right now, because when you hear news such as these, it's actually good news, because it means that the markets will be forced to stimulate the economy. The only way to get away with this is to stimulate the economy. And with the high over $35 trillion in debt, the only way to service these debts, because they can't pay it. So every time the interest payment is due, like right now, end of the year, they can't repay it. So what do? They refinance, meaning they issue even more, stimulate even more, issue even more funds. And this is the plan that we said that this is the reason why the only way for the US to remain a dominant, they have to give green light to these large asset managers to use their tokenized shares as collateral. Why? Because they'll be using this collateral to purchase US debts. And because BlackRock's Beetle Fund is focusing solely on purchasing US debts, this is the reason why the government is giving them the green light. Because this liquidity fund, what does they do? They focus on purchasing treasury bills, which is US debts, which is bonds. What is this Swiss company doing? They also focus on purchasing bonds, like we read here, right? They're doing the same thing. They purchase equity, which is for companies, real estate, and bonds. They all do the same thing. They're all in one place. Vela, same thing. And Credit Bull, same thing. They all want to use these tokenized assets as collateral, meaning that they can purchase US or in their case, Swiss debts, right? And this helps the government, this helps the central banks. And this is the only way that the US can remain and keep being the largest global reserve currency is by allowing BlackRock, Templeton, and all other asset managers to use their money market funds as collateral, purchase US debts with it, and use the liquidity fund, BUIDL's liquidity fund, to provide liquidity for it. And this is exactly what's getting ready to happen. And because BUIDL's liquidity fund is paired with USDC, USDC is also legally required to purchase US debts. So both this liquidity fund, BUIDL, and USDC are required to purchase US debt. What does that mean to us? It means that now, even if there is war, this means that more money is going to be printed because we have all asset managers that need to tokenize all these assets. They'll need liquidity. And who is going to provide it? The government. And how are they going to purchase this? Because they're going to use the tokenized, they're not going to use the collateral because they're allowed to use their funds that they already have, the money market funds, as collateral. So they have the funds already. BlackRock alone has $10 trillion in funds that they can buy US debts with. So what are we saying? Because all of these are on the Ethereum blockchain. So we are about to experience a huge influx community of liquidity entering the market, Ethereum specifically. We shouldn't worry about the news that we're hearing this. All this panic selling is happening because of these news that we're hearing. Actually, we should look at it in a different way and embrace these global uncertainties because it's an opportunity and it gives the central banks and the Feds and the governments a reason to stimulate the economy, meaning printing more fiat money to stimulate the economy. So this is why you see smart money, they are busy purchasing billions of dollars, right, in ETFs. Because why? Because they can use these ETFs as collateral, and collateral is asset. What happens if interest rates are being cut and money is being stimulated? Prices go up. So while retailers, obviously they're not informed and they're not educated, they are dumping assets, while smart money understands that you need to accumulate asset right now, especially if that asset is scarce, it retains liquidity. It's solving these problems right now. Is your asset that you're having, what does it do? What's its purpose, right? They're telling you right here. Their aim is to increase liquidity. So does your asset, does it increase liquidity? Does it retain liquidity? Or right here, does your asset have sustainable staking distributions? Or is your asset, is it efficient? Does it give you a yield? Is it on chain? Can you verify it? Is it liquid? You have to ask yourself these questions. And what else? Is it efficient? They want to enhance efficiency. And they want to provide high quality private credit products on DeFi. In order to have a high quality product in DeFi, it needs to be liquid. You need to be able to use it as collateral. And it needs to give you a yield, some sort of yield. That's how it looks like. Now that we've discussed this community, let's look at some numbers. So the blockchain-based private credit market, like we said, it's at $9 billion US dollars. This is nothing, right? And it's dominated by fintechs. So these are traditional companies. And why is it dominated by traditional companies? Because DeFi doesn't focus on retaining liquidity, unfortunately. These fintech companies are the ones focusing on retaining liquidity. They're the only ones talking about wanting to retain liquidity, having sustainable staking, and the aim to increase liquidity. DeFi products don't focus on retaining liquidity, right? So if it's not BlackRock or traditional financial fintech companies, they don't retain liquidity. So this is still a tiny compared to the booming private credit market in the traditional finance market, which is at 2 trillion. So right now, things are about to be tokenized, especially this credit, this private credit market. And right now, this private credit market is at 2 trillion. And on chain, on Ethereum, it's only 9 billion right now. So imagine there's 1,000 billion in 1 trillion, and we are sitting at 9. So this just shows you how much liquidity we're about to experience on the Ethereum blockchain. Now that we understand that these 4 companies are solving the 4 challenges community, these 2 are focusing on, the aim is to increase liquidity. This one is focusing on sustainable staking distributions, right? Staking rewards. And then finally, this one is focusing on efficiency, right? They're saying here they want to provide, they want to be efficient. They want to provide efficiency, right? They want to innovate, drive innovation and efficiency into DeFi. What does that mean? That means they understand that DeFi right now is inefficient. It is inefficient. So they want to drive innovation and efficiency. So what do we have here, community? We have lack of liquidity that they're solving, unsustainable staking distributions, this second company is solving, efficiency, that's another one. But then who is solving scarcity? What about inflation? There is no company that is solving inflation. So it takes 4 companies to solve 3 challenges. But the 4th challenge is not being solved, which is inflation. So scarcity. So now you have an asset that is not just, they say that they want a high quality private credit product, right, in DeFi space. And they described it. It should be a liquid asset. You should be able to use it as collateral on chain to lend. And then they also want a high yield as well. So that means it needs to be giving you staking distributions, and it needs to be liquid as well. And you should be able to verify it on chain and use it as collateral. And it should be giving you sustainable staking distributions, and it should be liquid as well. What other assets do you know that has all of this, plus it's scarce? The only one I know about is the Bullrun ecosystem community. It's the only one I know that doesn't just retain liquidity and give you staking distributions in a sustainable manner, and that is efficiently using its trading volume, but is also scarce. What do we mean scarce? We started with 1 million in supply, and now we are down to 966,000. So again, you have to be in the liquidity business community. You have to be in the liquidity business. This is why the CFTC, which is the Commodities Futures Trading Commission in the US, has given green lights to firms to use tokenized shares, which are asset managers, as collateral. And they'll use these collateral, which are money market funds. And these are the BlackRocks, the Franklin Templeton, the 21 shares, all these 11 largest asset managers that have combined over 40 trillion in assets. They're going to be tokenized on the Ethereum blockchain. This is where they're going to be tokenized. And who is going to provide liquidity for them? The digital liquid fund from BlackRock. Who is this BUIDL token? What is it paired with? It's paired with USDC stablecoin. What does this mean? This means that the larger this fund becomes, which it will be up in the trillions of dollars, the more USDC also will have to purchase treasury bills. And what will that mean? That means that all these challenges that we're facing, all these uncertainties that are going on, global uncertainties, will be financed by printing money, because now we have stablecoin USDC, we have BlackRock's tokenized assets, and we have all these other nations that are also doing the same thing by tokenizing entire Swiss company equities, like entire markets, and then using them to increase liquidity by using them as collateral, right? So this is what institutions are solving. They're here to solve liquidity challenge, sustainable staking distributions, and they want to be efficient, right? They want to do this efficiently. And this is exactly what we are all about, community. This is what we are all about. We're solving those 4 challenges all in one place. We don't need 4 different companies to do that and still miss on scarcity. This one ecosystem is solving what these 2, Taurus and Actionarat, are doing. They're here to increase liquidity. And then we have to go to the 3rd company, Vela. They're here to provide sustainable staking distributions. And then we're going to the 4th company. They're here for efficiency, right? They're here for efficiency because they identified that there's a lack of efficiency in DeFi. They want to bring efficiency into DeFi, right? Efficiency in the DeFi space. This is what they want. So it takes 4 companies to bring efficiency, have sustainable staking distributions, and increase liquidity. But they're not focusing on scarcity. So on top of what these 4 companies are doing, we are also adding a twist to it, bringing scarcity, because we have a staking platform. So we have to be scarce. If you have scarcity in your supply, in your ecosystem, this is what you want. And assets, this is why this now answers the question. Why are people jumping? Why are people selling Bitcoin? Why are people selling Bitcoin and buying gold? Why? Why is that the case? Why is that the case? It's due to the liquidity of it. It's very liquid. And also what I want you to know is that all that we've been told, Bitcoin is not a safe haven. It's not a risk asset that you run to during times of geopolitical, this is something that is not me saying it. This is one of the largest banks in the world, Chartered Standard. They said that the digital asset is not a safe haven against geopolitical risks. It's a hedge against traditional financial issues. That's it. But if it comes to geopolitical risks, it doesn't help you, right? And we've been told different so far. We've been always told that in times such as these, you need to buy Bitcoin. But obviously, people are selling it for gold. So the bottom line, community, this is the end of the story today. That's the end of the session today, is that the moral of the story is that let's not be carried away by these global uncertainties. Actually, we should look at them as opportunities and realize that these are indicators that interest rates will be further cut, liquidity will be further added into the market to stimulate the industry, and that once that happens, assets go up. And this is the reason why you see smart money piling up billions of dollars in ETFs, because they can use these ETFs as collateral, right? In their case, they can use these tokenized shares as collateral, right? And not just US is doing that, but the largest and arguably the most trusted banking system and banking nation is Switzerland. They're doing the same thing. And these nations are here to solve challenges: liquidity challenge, sustainable staking distributions, and efficiency, right? They're missing one thing, and that is scarcity. So these 4 companies, they're not focusing on scarcity, but we are doing it. So we're focusing on liquidity, sustainable staking distributions, and scarcity, and efficient use of volume, right, as well. So whenever you hear us talking about solving these 4 challenges, we've been talking about this for 2 years since we launched, was because we understand how economics works. And you see here now how these institutions, and these are Swiss grade, Swiss level institutions, what are they into? They're into the business of liquidity. They want to retain liquidity, staking, sustainable staking rewards, right? They have this product in the London Stock Exchange, and they want efficiency. This is exactly what we always talk about. And this is done in a decentralized manner where you don't have to worry about your bank locking you out. This is why they were like, okay, banks are down, but Ethereum doesn't. Banks go down, but Ethereum doesn't. And this is only happening if you're using DeFi wallet. If you are master of your assets, if you're your own bank, you have full control of your assets. You don't have to worry about your bank logging you out of your own assets. And this is why we always preach, learn how to use your DeFi wallet, be your own bank. That's the whole idea of the blockchain technology, right? So while it takes institutions to focus on these 4 challenges, and it takes 4 companies to do that, we have it all in our ecosystem. We're doing it all in one place. And this is so encouraging to see that it takes institutions to identify these 4 challenges, and it takes 4 of them to identify these challenges, but they're still leaving out the most important one, scarcity. So in addition to retaining liquidity, distributions, and efficiency, like these 4 companies are focusing on, we are also focusing on scarcity as well, right? And community, this is what it's all about. You want to develop a platform that is literally solving challenges and do it in a manner that it empowers the community. It's not an institution, but it's a decentralized platform, open for everyone to participate. Now imagine we don't have to be part of these institutions because you don't own these assets. You're literally purchasing tokenized shares. You don't own the real deal. To take advantage of their liquidity, to take advantage of their sustainable staking rewards, and to take advantage of their efficiency, you have to buy shares, tokenized shares. You don't own the asset itself. And this is why you can be locked out, right? You can be locked out from the bank, from institutions. But in our case, this is DeFi. You own your own wallet. Nobody else has access to it besides you. Learn how to operate your own DeFi wallet. And now you have a platform that is retaining liquidity, accumulating USDC distributions, is scarce, is sustainable, is efficiently using its trading volume to accumulate even more liquidity, be even more scarce, and accumulate USDC distributions for the stakers. This is a win-win-win situation, community, for the holder, for the staker, and for the trader. And this is what sets us apart. The more traders trade, the more liquid we become, the scarcer we become, and the more the stakers stake. And if we look at our staking percentage, community, it's amazing. We are at over 74%, 74.4%. So we are clearly already the 3rd most staked cryptocurrency in the space. And this is without even going through a bull market. This is without even having consistent volume. This is without even being known as a global player yet. We're still a small community, and already we are the 3rd most staked. This is a major accomplishment, community. This is big. So not only are we the 3rd most staked, but we are the only asset that is literally scarce, and also that is focusing and understands that we have to be in the business of liquidity. Because the more liquid you are, the more volume you get. The more volume you get, the more liquidity you accumulate, and the more traders you attract. The more traders that come, the more volume. The more volume, the scarcer we become, and the more USDC distributions we accumulate. The more USDC we have, the higher the staking percentage. The higher the staking percentage, the more people you attract, because more people want to stake even more. What does that mean? The scarcer the supply. The scarcer the supply, the deeper the liquidity, because it attracts more traders, because traders are happy to trade not just a liquid asset, but ones that also has the most stake then gives the most yield as well. So you see that we created this positive feedback loop that feeds itself. So once we start going, community, we'll have ourselves our ecosystem that is empowering the retailer. If you can empower the retailer, this is how you generate wealth, is provide a platform, provide service, add value to as many people as possible, and do it better than anybody else. And this is what our ecosystem is all about. This is what our platform is all about, community. And I hope that now at least we can point out, because these are brand new projects. They're just launching in November, like this one. They aim to come out in November, right? They're set to launch in November. So they're just launching. And we've been around for 2 years already in the business to provide liquidity, but they're just coming on to provide liquidity. They are also coming end of the year. And their aim is to have a sustainable staking distributions. And these are not on smart contracts, community. So you can't verify. It's not on chain either. And then they want to bring efficiency into the DeFi space, right? You see here, they want to add efficiency into the DeFi space. It's also not a smart contract. It's tokenized assets. You receive shares, right? So this is the difference, community. And it's beautiful that at least we can now start pointing out and showing examples. Maybe this will help in making people understand what we're doing here, that we are driven by solutions. We identified challenges, and these challenges are addressed by 4 different companies, but none of these 4 companies is addressing scarcity, inflation, right? So this is another part that we have on top of what 4 of them already are doing, right? So on top of what they're doing, we're doing scarcity on top of it as well. So that's it for on our side, community. And let me come to you and check with you whether there's any feedbacks. Let's go through your comments like we discussed. Let's see what you have going as far as your comments. Bear with me as I'm about to share my screen. And then we can go through your comments. All right, community, let me scroll up. Let's go through your comments here. Queen Resogo says, hello, our Queen Mom, Mama. Hello, our beloved brother, King Steve. Hello, Bullrun community. Let's take our seats, buckle up, and be ready as it's about to take off. Thank you so much, Queen Resogo. It's always a pleasure seeing you. Your consistency is very much appreciated. Thank you for your feedback. Thank you for always being part of these sessions. We have Queen Gloria says, the time is now. Wake up, Africa. Our financial freedom is here. Very well said, Queen Gloria. Thank you for your feedback. Also, thank you for always being part of this session today. We have Queen Grace is here as well. Greetings, Mr. Steve, our mom, and the entire Bullrun family. I'm already excited by the title of today's session. We cannot thank you enough, Steve, for your tireless efforts to educate and inform us. Thank you so much for your kind words. We also thank you, Queen Grace, for all your efforts you're putting in, your leadership, your consistency. And I'm glad that we can all be informed and educated and inspired, because we can get carried away so quickly as we know that this industry is based on sentiments, based on emotions. And as we saw today, fear dominates the industry, where actually there is no reason to be fearful. If you're informed and educated, you understand that this is a big opportunity. Actually, it's time to accumulate. It's time to be ready to have your bags, because we all know that if you hear rumors like this just means more inflation. More inflation means asset prices are going up, means interest rates are being cut even more liquidity is entering the space. I don't see why people are so fearful. I don't see why people are selling off assets. It makes no sense, but it's because they're not informed and they're not educated. They don't understand how macroeconomy works. They don't understand that. But this is why we educate, we inform on a weekly basis to ensure that we're all on the same page. Queen Mel says, Happy Thursday, family. Greetings, Queen Mom and Mr. Steve. Greetings to you too, Queen Mel. Always happy to see you in the community as well. Queen Lati says, Greetings, Bullrun family. We thank the Lord for the gift of life as we await the teaching from our tutor. Thank you, Steve and Queen Mother, for your dedication to the Bullrun Ecosystem Project. Thank you also for always being present, for your consistency, your commitment. You're very much appreciated, Queen Lati. And I'm glad that these educational sessions can help you. Queen Patricia says, Good evening, family. Good evening, Steve. Waiting to hear and learn from the best. Thank you, Steve, for your commitment and dedication. Stay protected and blessed always. Thank you so much, Queen Patricia. You're very, very much appreciated. May you and yours also be blessed and stay protected. Queen Mel says, Another day of educational programs. I'm very ready. Always a pleasure to see you, Queen Mel. Thank you for your feedback. Queen Cozy says, Greetings, Bull Runners. Good evening, Queen Mother and Brother Steve. Good evening. Back to you too, Queen Cozy. Queen Val says, Hello, family. Happy Thursday. Very excited about today's session. Thank you, Mr. Steve, for always making them the sessions to look forward to. What more could we ask for as a community? Thank you for your kind words. Thank you for your feedback. You're also very much appreciated for all that you do. Mr. and my brother Abdullah here, warm greetings to all. Love the mindset shift from risk to opportunity. Very beautiful. Yes, Brother Abdullah. This is exactly what the message is about. This alone summarizes, if you take away anything, is that shift from risk and challenge and look at the opportunities. This is exactly the message. Uncertainties are indeed chances for growth and innovation. Yes, yes. Thanks for creating a space to explore and learn. Very well said, my brother Abdullahi. This summarizes the 2 hours, 1.5 hours we've been talking. This is exactly it, right? We shouldn't look at the situation we're right now in, these global uncertainties, as risks and challenges. We should look at them as opportunities and realize that these are the opportunities that will give the green light for the Fed to cut even more interest rates, to stimulate the economy with trillions of dollars. And what does that mean? That means asset prices go up. So if you're selling your assets to hold on to fiat because you're panicking, you're losing on the opportunity and you're focusing too much on the risk and the challenge, and you miss out on this large, massive liquidity rush that we're about to experience with all these tokenizations that are about to happen. Very, very well said, Brother Abdullahi. For our new members, welcome to our community. Feel free to join. Exactly. Queen Val has put out the Telegram group for Bullrun here as well. We have one for Killer Whale and Survivor as well. So feel free to join us community. Join our community if you're new and have not yet done so. We're very active on various social platforms, not just here on YouTube, also on Twitter, very active as well, and on Telegram as well, of course, and then on Zoom as well. Queen Marawino says, greetings, family. Happy to be here amongst our amazing queens and kings. Looking forward to another educational and informative session. Thanks, Steve. We love and appreciate all you do for us. Thank you so much, Mom. You're very much appreciated. And we also appreciate you very much. And we love you very much for your commitment, your leadership, leading by example, and all your encouragement. Thank you very much as well. My brother Eric says, greetings, family. Happy Thursday to all. Another great opportunity that I've been waiting for to receive insights into crypto space. Much blessings to our Mama Wino and Brother Steve. Thank you so much, Brother Eric. Always a pleasure seeing you. Thank you for being part of these sessions consistently. Queen Debbie says, blessed day, community. Blessed day to you too, Queen Debbie. I hope you are well. Queen Patricia says, hello, Mama Wino, Brother Steve, and Bullrun family. We are blessed to be part of these educational sessions, to be able to take control and not let fear run the show. Beautifully said, Queen Patricia. This is exactly the message. This is it. Let's not let emotions, and in this case, fearful emotions, get the best of us. Let's maintain a clear, rational mindset and understand and see the opportunities that lie ahead of us, right? This actually, we should be excited about this. We should look forward to this, because if everything is good and everything is going smoothly, there is no reason to stimulate the economy. Think about it. And it seems it's always the opposite, right? And the more disasters, all this loom and gloom and all these uncertainties that on a global scale, this is good news. This is good for us, especially in the crypto industry, that especially us down the Ethereum blockchain, and we realize that all these tokenized assets are actually on the Ethereum blockchain. So all this liquidity, we're about to be part of it directly on chain. And we have a platform that is literally focusing on these 4 challenges, right? And we see that traditional institutions are the ones solving them. What are DeFi platforms doing? Why do we have to wait for traditional platforms to solve these challenges? And we can solve that, and we are solving all of them in one place. And we had to look at 4 different companies that are solving them individually, but they still missed out on the inflation part, right? Brother Abdullahi says, warm greetings to you all. Love the mindset shift from exactly. Yes. This was a very good one. This is a good summary. Queen Poloko says, happy Thursday and good evening all. Good evening right back at you too, Queen Poloko. Queen Debbie says, greetings, my brother Steve and Mama Wino. I'm grateful it's yet another day to be educated with the best teacher in the crypto industry. You are the best, my brother. Thank you so much, Queen Debbie. You are very much appreciated. Very kind words. I'm very humbled. And I believe that we'll all be on the same page. We'll all be on the same level. You know, this is why we focus so much on doing these 4 sessions, weekly sessions, daily Zooms, so that we all be the same. So you won't need me anymore, community. You know, you won't need me anymore. You'll know exactly everything we know. You will know as well. So I'm glad that it's helpful. Thank you so much, Queen Debbie, for your kind words. Queen Aloshi says, hello, Bullrun family. Dev Steve, kindly help me understand NFTs. Do they have a fixed price of or depends on the value of investment? Must one buy all of them at a go, or one can buy one at a time? Very, very good question, Queen Aloshi. Let me ask them one by one. Let me answer them one by one. So the first one, NFTs that we have, our NFTs are simply here to help you boost your USDC distributions. You can buy a maximum of 5. And when you have 5 of them, that means when you stake your BRL tokens, you have 100% of your USDC distributions. That's the first one. And as far as the fixed price, yes, it's a fixed price of 0.1 ETH. So that means that the higher the ETH price goes, the higher the price of the NFT will go as well. Why are we doing that? It's because as we grow as a community and as we expand as a community, we want to ensure that those that are coming in later won't have an advantage over those that have been around for early on. And also we want to use this NFT revenue as liquidity. So as we progress, obviously, there will be bigger whales that are joining the community. And that means that these revenue from the NFTs will help us to be able to add even more liquidity into our ecosystem. And this is what we focus on. And no, it's not depending on the value of your investment either. It has nothing to do with the value of your personal investment either. And you don't have to buy all of them at once. You can buy them one by one at a time. So you're not obligated to do that. Just understand that the higher the Ethereum price goes, the higher the NFT price is as well. And also, you can pick how much you want to buy at a time. You're not forced to buy 5 of them. So it's up to you. You make the decisions, right? Just understand that the reason why we have these NFTs is to have an additional source of revenue to generate so that we can add onto our liquidity, because we are into the liquidity business. We understand that the deeper the liquidity, the more volume that we get. And the more volume we get, the scarcer we become, the more liquidity and the more USDC we accumulate. And this makes us a very sustainable and efficient ecosystem. Queen Aloshi, I hope this answered your question. And if not, please feel free to ask more questions so I can elaborate even more. Queen Val put out Survivor Telegram group here as well. Above we had Bullrun. Here is the Killer Whale as well. So let's ensure that we are part of these communities on Telegram if you're not yet. And also let's engage with this video, as it will reach as many people as possible. The more we engage with it, especially after the live, let's ensure that we engage with it. And also, if there's anything that stood out to you that you really enjoyed during this session, a message that caught your attention, feel free to write it down, put it there, share it with others, so that we can all benefit from what you've heard, and let's engage with it. Queen Sarah says, greetings, Brother Steve, Queen Mom, and the entire family. It's yet another day to learn. Kindly, Mr. Steve, what is the difference between meme coins and altcoins? Which ones are examples of each? Excellent question, Queen Sarah. Meme coins are, like the name suggests, it's just based on meme. It's based on, like, for example, right now, you remember how we had elections right now. So their meme coins can be, for example, a coin dedicated to Donald Trump or Kamala Harris, right? It's a meme. Or it can be dedicated to a cause, like, for example, celebrities, right? Celebrities can come up with their own meme coins. And usually meme coins really have no fundamentals. They're not utility tokens, which, like, for example, you can do lending and borrowing, or you can stake, or it doesn't, or it's an exchange that you can trade on. They have no utilities. It's just a meme. It's just based on hype and based on just fun. Those are meme coins. Altcoins just means that, okay, there is Bitcoin and then there are altcoins. Bitcoin is the original cryptocurrency, the original blockchain, the original technology. And then out of Bitcoin was Ethereum. Out of Ethereum, there was Binance, and then all other cryptocurrencies, right? Everything originated out of Bitcoin. So the Bitcoin is on its own league, and everything outside of Bitcoin is considered altcoin. And within the altcoin group is there's a subgroup known as meme coins, right? There are meme coins, there are utility tokens, there are governance tokens. Those are the three different ones: meme, utility, governance. Meme is, like I said, it can be a celebrity, it can be presidents, it can be animals like Doge, Shiba, those are meme coins. And then there are utility tokens, right? Such as Bullrun. Our utility is staking. Obviously, you can stake and you receive USDC distributions. Aave is a utility token too. You can borrow and lend, right? Uniswap is a utility token too. You can swap, you can trade tokens. And then there are governance. That's another. Governance tokens are basically what you do. You can just, the more tokens you hold, the more you can add to, you can have a voice. You can vote how the direction of the project should go. So those are the two different types, subgroups under altcoins. So there is Bitcoin, then there are everything else is altcoin. And then amongst the altcoin groups, there are subgroups: meme coins, utility tokens, and governance tokens, right? And meme coins, like I said, is just for fun. They have no use case. It's just hype and meme and fun, right? And then the utility tokens such as Bullrun, such as Uniswap, such as Aave, that you can literally either trade, lend, stake. That's what it does. And then governance is just the more you hold, the more vote you have. You can vote for changes. You can vote for things. Those are the three different subgroups under altcoins: Bitcoin, altcoins, and then three subgroups: meme coin, governance, and utility tokens. I hope that answered your question, Queen Sarah. Uncle George, always a pleasure to see you, Uncle George. He says, greetings, Steve, Mama Wino, and the entire community. Today's topic is very relevant. There is high expectations in the crypto market. If we didn't have good understanding of the ecosystem, we'd panic big. Beautifully said, Uncle George. This is exactly right. And this is the reason why we chose this topic for today, as we see that there's a lot of confusion, a lot of global uncertainties going on. And you're absolutely right. If we didn't have good understanding of the ecosystem, of the macroeconomy, of the monetary systems, and all these things we've been discussing and learning together, we would also be part of this panicking group, right? But now we can just relax, and we understand what's coming, and we, instead of panicking, we see this as an opportunity, right? So beautifully said, Uncle George. You're exactly right. Queen Grace says, greetings to our developer Steve and Queen Mother and Bullrun family. Another Thursday to gain more knowledge in the crypto space. Thank you very much, Steve, for powerful lessons always. Thank you very much, Queen Grace. You're very much appreciated. Thank you for your feedback and your consistency. Queen Mother Caroline is here also. Greetings, Bullrun family. Another great and informative session. We appreciate all that you do. Thank you so much, Queen Mother Caroline. Always a pleasure seeing you. It's very inspiring to see you always being here consistently, and your support means a lot to us. My great brother Theo says, greetings, my great brother Steve, dearest great Queen Mama Wino, and wonderful BRL family. Thank you, great professor, for all that you do for our community and for always leading by example. Salute. Thank you so much, my great brother Theo. I hope you and yours are doing fantastic. I hope you're keeping safe and you're staying healthy. Always a pleasure seeing you here as well. Queen Beatrice says, greetings, Queen Mother, Brother Steve, and Bullrun community. We are yet back for another informative, educational, and inspirational session. Very much appreciated, our brother. Thank you so much, Queen Beatrice. You're also very much appreciated. Always happy to see you in the community. Thank you for your consistency, for always being part of these sessions. Very, very much appreciated. Queen Patricia says, thanks to you, Brother Steve, for educating us at Bullrun Ecosystem. We are way ahead of the game by addressing 4 challenges in history of blockchain. Very true, Queen Patricia. Very, very true. The beautiful thing that you said, Queen Patricia, is that we've been talking about these 4 challenges for 2 years now. And I believe now that we see large institutions, different nations, putting out institutions to address these 4 challenges, at least 3 of them, like we looked at today, we at least have something that we can have as an example, right? Before it was just us talking about it, but now we can at least make examples and share our screens and point out that, look, these 2 companies came together to solve liquidity. This company came out to solve sustainable staking. This other one just came for efficiency. So we see that institutions are working to solve a specific challenge. And it's beautiful for us to see that, like you rightly said, we're addressing all 4 of them in one ecosystem. So this is the difference, right? So thank you for your feedback, Queen Patricia. Queen Aloshi says, family, our BRL is great. Imagine it's taken many companies to solve 3-4 of the problems BRL is solving. 3 out of the 4 problems BRL is solving. We have no match. Congrats, Steve and Mama Wino. May God lift you higher. Very, very true, Queen Aloshi. And this is exactly what we just discussed. It's amazing to understand how we have an ecosystem, a platform that has understood the challenges in the industry and then developed solutions in form of smart contracts on the Ethereum blockchain for it. And this empowers the retailers, right? If you can empower the retailers, you win, because you always have to empower and add value to the retailer, because they are the ones that are responsible or accountable rather for over 70% of all economic activities. So imagine if the retailer is empowered, has a liquid asset that is scarce, that gives him a cash flow in the form of USDC distributions, and this is done in an efficient and sustainable manner, and it's has nothing to do with debt. So imagine how productive this retailer is going to be and how it will affect the economy also greatly. So we are glad that we do what we do, and I'm sure as time passes, more people will appreciate and will wake up and understand that, whoa, this ecosystem is really adding value to this industry and using blockchain technology to its fullest potential. Queen Madawino says, as long as there are ongoing trades on Uniswap, the USDC distributions will be perpetually accumulated by the staking participants. Absolutely. Absolutely. And what Queen Madawino is saying here is amazing, because this is the difference. This is what we were saying. This is the second part that she's saying. As long as there are ongoing trading on Uniswap, USDC distributions will be perpetually accumulated by the staking participants, not only for 30 or 90 days. This is exactly the point, right? They are limiting it for 30 and 90 days because where does the rewards yield come from? We always say that if you don't know where the yield come from, then you are the yield, right? And this is exactly right, Queen Madawino. It's true. Ours is perpetual, based on trading volume and based on the liquidity, and not just for 30 days or 90 days, for a limited time period. Queen Rebecca says, hello community, thank you for the information, Mr. Steve. You teach us a lot and patience pays. Panic makes us not to attain our goals. Absolutely. Very well said. Very, very true, Queen Rebecca. Panic causes us to really lose sight, lose focus, and do irrational things. Queen Sheila says, good evening, Queen Mother, and our beloved King Steve, not forgetting the Bullrun community. Steve, thank you so much for opening Granny's eyes. May you be blessed, abundant. Thank you so much, Queen Sheila. You are very much appreciated. Happy to have you in the community. And thank you for being part of this session today. Queen Aloshi says, thanks so much, Dev Steve. NFTs clearly understood. I'm very glad that you understood it and that the message came across. Thank you for your feedback. Glad to know that you understood it. Queen Sarah says, thanks a lot, Brother Steve. Well understood. More blessings to you. Very glad that I was able to answer your questions as well. And I want to thank you all for your feedbacks. Community, we are growing so much. It takes us a half an hour just to go through the comments. This is great. This is progress. This means that we're growing. This shows your interest, your commitment, your activity, proactivity. So thank you so much, community. I want to thank you all for being part of this session today. It was another great showing. I hope the message came across. We have something beautiful, something wonderful. Let's use the opportunity as we are experiencing these global uncertainties. Let's look at them as opportunities and understand that this will trigger even more interest rate cuts. These occasions will trigger, these uncertainties will trigger even more, stimulating the economy even more and provide even more liquidity. So let's be having that type of mindset, abundance mindset. Let's have an abundance mindset, right? And this is what we need to have. It's not just wishful thinking, but it's because we have strong fundamentals in our ecosystem, and we are a very, very informed and educated community. So we move rationally, and we're not led by emotions like the markets are right now, right? So with that said, community, this is the message for today. I want to thank you all for being part of this session. I want to wish you a wonderful rest of your week, and I'm looking forward to our next community event on Saturday, and where we can have another dialogue together. For those that are just coming in or have not tweeted yet, I encourage you to us all to tweet. Let's ensure that we engage with today's tweets, as we tweet every day. Bullrun, Survivor, Killer Whale, they're all out. Let's engage with them. And also let's engage with this YouTube live stream today, right after we finish. I encourage you also, if there's anything that you took away from today, share it with other community members or those that are not part of the community yet. So once they read that, they'll be inspired to also maybe listen in and be part of our community. Let's work together to bring as much as awareness as possible, so that we can use the network effect to our own benefit. With that said, community, I want to wish you all a wonderful, wonderful rest of your day. Thank you, Queen Madawino, again for your wonderful, wonderful insights. And thank you, Queens. Thank you, Kings. Have a wonderful rest of your week. It's been a pleasure again today. And till we meet again on Saturday, bye-bye, everyone. Stay blessed. See you soon.